All right. So we are live on the Living Off Rentals page and in the group now. So Dave, welcome to Living Off Rentals.
Kirby, thanks for having me. It's a pleasure.
Yeah, it's great to have you. To me, it seems like most people always either have a good deal or they have money. But it seems like it's rare for people to have both at the same time or the perfect amount of both at the same time. And as just a general rule, I guess, I tend to focus a lot more on deals on this podcast. I think that's just where my mind goes. But raising money is definitely a topic that comes up a lot in this community. And I've been wanting to have an expert on the topic. And so I'm excited to meet you, and I was excited to come across your work. And I think the community is really going to benefit from learning more about the 5-step money partner formula. So I'm excited here. But before we get into that, I'd love to hear a little bit more about your background and how you first jumped into the real estate investing space.
Awesome. Yeah. So I started actively investing in real estate in 2003 after living outside of the country for over a decade. So I'm, as you can hear from my accent, I'm Canadian from British Columbia, Canada, and traveled around Latin America for a couple of years, lived in San Jose, Costa Rica for 10 years, got married, had kids down there, had a pretty successful language training company. And then in 2003, we decided to pack everything up and move my Costa Rican wife and our 2 little kids to Canada. And everybody goes, why would you do that? Leave tropical paradise, move back to the frozen hinterlands. Well, I think you're from Chicago, right, Garvey?
Right. Yeah.
You know what winter is.
Yeah, that's for sure.
And the reason is you don't realize what you got till you're gone for a while. I love Costa Rica, but being a pasty-faced white guy, whether you got money or not, there's a target on your back a little bit, and there's a risk of, being kidnapped and held for ransom, you or your family, that sort of thing. I know you're a military guy, Kirby, so you've been in parts of the world where that's definitely a reality. It's not a big issue where I live in Canada. It hardly ever happens. In fact, I've never heard of it happening. So, but then it was like, okay, came back to Canada. I've been gone for so long. I didn't have bad credit. I had zero credit. I'd been self-employed for so long. I didn't have really any skills, to use other ways. So no job opportunities, no contacts. Hadn't been able to sell my business in Costa Rica, so I didn't have much money. So we went from this nice upper middle class lifestyle to living in a crappy rental townhouse on the wrong side of the tracks with my then persnickety wife, who was accustomed to the finer things in life. So it was like, what do I do? And that's when I saw one of those big, you remember those, you're probably too young to remember this, but late night infomercials. You too can get rich in real estate with little or no money down. Have you ever seen those things or heard of them?
Oh yeah, absolutely.
Yeah, they're probably still on. So I sat away for one of these suckers and got it. It was so long ago. It was a bunch of binders, and I think there might have been a VHS cassette or two in there too. And went through this and took some pretty good action. Did 18 deals in 18 months in and around the small city I live in, which had about 80,000 people in it at the time. And that really got me started with real estate investing. Didn't really need to raise capital at that point because it was all creative, no money, low money down type stuff. But fast forward a few years, after taking a break from real estate for about 3 or 4 years, got back into it, started doing what's called tenant first rent to own. So basically, we would find a good tenant buyer, go buy them a house, and then lease option it to them for 2 to 3 years while we help them get qualified for financing. So now I started to have to come up with big chunks of cash for down payments, closing costs, property transfer taxes, all that stuff, right? So like a lot of people, Kirby, I'm sure you see this all the time. I started off by self-financing. So I'd use my own money, my own credit, but eventually you hit that wall, right? You run out of cash, you run out of credit. And then, of course, that's when great deals tend to fall right in your lap. And that's what happened for me. I had this great opportunity, and these tenant buyers came in, and we went looking for properties, found one, got it under contract. And the only thing I was missing was $85,000 to close on the deal. So I've been reading books and listening to gurus and all this kind of stuff. And I'd always heard this thing, just find a good deal and the money will find you. Have you ever heard that one?
Absolutely.
Yeah. So I drank that Kool-Aid, but I knew, it was more than just the secret that just imagine it and the money will flow into your life. That ain't going to work. So I said, okay, well, how am I going to get this money? So I'd also heard pick up the phone and start dialing for dollars. So I tried that. I'd love to say I just ground it out and did hundreds of calls and raised the 85 grand. I didn't. I did about 10 calls, got rejected, got downcast, got pouty, and quit doing it. This is basically what happened. So then I also heard, you know what? If you need to raise money, go out and turn every conversation into a real estate conversation. Go out there and meet people, network, schmooze, use your 30-second elevator pitch, your 30-second commercial, whatever you want to call it, and shake the tree, raise some money there. So I did that. Chamber of Commerce, BNI, Toastmasters, wherever they'd let me in the door. I schmoozed up a storm and raised zero capital. And I think 2020 hindsight is because I was desperate. I really needed that money, and that just kind of oozed out of every pore in my body. By this time, my 2 weeks were almost up for subject removal, so I got a 1 week extension, and I came up with a partially brilliant idea, but I executed it poorly. So the brilliant idea was, hey, you know what? I know some people. Some of them probably have some money. So I put together, the smart thing I did is I put together a list of about 200 people that I already had a pre-existing relationship with, friends, family members, people that I knew and who knew me. And then I thought, hey, this is such a good deal. If enough people see it, somebody's going to jump on it, right? So I put together a little one-page PDF, and I emailed that out to everybody on that list. And that was about 5, 6, 7 o'clock at night. Went to bed, got up the next day, and gleefully saw that I had a number of replies in my inbox. I was gleeful until I started reading some of those replies, Kirby, and basically they're saying, Dave, haven't heard from you in forever, and here you are hit me up for money for a deal. Take a hike. So the reason I got passionate about raising capital, Kirby, was because I crashed and burned so badly then. I can still vividly remember it. I had to return my tenant buyer their $10,000 option fee. Mm. They were super ticked off, obviously. The seller was ticked off. The realtor was ticked off. Mortgage broker was ticked off. And I'm in a small community, so I had some major egg on my face.
Yeah.
And you know what? I sat down, I pouted for a while, and then I licked my wounds, and I said, you know what, Dave, if there's something a few things about it's marketing, because I had a background in marketing. Why don't you see if you can apply marketing, intelligent marketing, to this process? And instead of chasing after investors, what do we kind of turn that around and get investors coming to you? I wouldn't say chasing after you, but let's get investors coming to you, asking about your deals. And if you can do that, then that kind of a conversation is easy. So that's how this whole thing started, Kirby. And I changed my philosophy when it comes to, find a good deal and the money will find you. Here's my philosophy. Get your investors lined up, ready to go. Get your investor ducks in a row first, then go find the deals, because then you know what? You can tie up those deals. You can get them under contract. You can get rolling with confidence because you know that you've got the money to back you up. Does that make sense?
Got it. Yes, totally.
So that's the thing. Attract, don't chase, and get the money lined up first. Those are the big foundational pillars of my raising capital philosophy.
Got it. And are you still raising deals or raising money for those type of deals, the tenant buyer deals, or what type of deals are you doing nowadays?
Yeah, so I did that for a couple of years, and that was fun. And I raised not a heck of a lot, under $1 million for those kind of deals. And then in 2013, I switched focus and I realized, you know what, Kirby, real estate's great, but I kind of suck as an active real estate investor. I enjoy finding the deals. I enjoy the marketing side of things. I don't enjoy dealing with tenants and toilets and repairs and rehabs and paperwork and all the stuff that you know very, very well that's involved with that. That's not what juices me up every morning. So I started partnering up with people that are good at that stuff, and I'd bring my own capital and I'd help raise capital for deals. And so these days, since about 2013, I'm more of a passive investor.
Got it. Okay. Yeah. Knowing yourself is one of the most important things. And it solves a lot of issues once you figure that out. So do you think there's a lot of probably newer investors listening to this? Do you think raising capital is something that everyone should be thinking about? Because I think some people are like, well, that's just for commercial investors, or if they're investing in luxury deals, I don't necessarily need to do that. Is this something you think everyone should be doing?
No, I don't think everybody should be doing this. I think, especially if you're brand new to real estate investing, you should, if at all possible, do your first deal under your own financial steam, if at all possible, right? Because when you've got your own financial skin in the game, you take it very, very seriously. You learn a lot. You learn a lot faster. Plus, now you've got a little bit of street cred. So when you do start raising capital, you've got proof of concept. And if somebody says, "Hey, Kirby, are you putting your own money into this deal?" You can legitimately say, "No, I'm not. And here's why. My money is already tied up in this other deal or these other deals. This is why I'm bringing this opportunity to investors, is to give you the opportunity to partner with me on a deal and share in the profits while I do all the work." Right. So there's a reason why there. So is it possible to raise capital for your very first deal? Yes, it is possible. Is it easy? No, it's not. Right. I mean, it's a bit of a challenge unless you've got a little bit of a track record. Does that make sense, Kirby?
Yeah, absolutely. Yeah. And I guess working with all the different people that you've worked with, I'm curious to hear what stops most people, or what are the biggest challenges or hurdles that people are struggling with when it comes to raising money, and why it's such a problem for a lot of people.
Probably some of the same problems that stop people from doing their first deal in the first place, Kirby. And I know you've seen this a lot, right? It's one thing to learn about something; it's something else to actually go out and do it. So, when it comes to raising capital, it's that fear of the unknown that holds so many people back. It's like, oh my God, where do I start? Who do I talk to? Who do I not talk to? Because I heard of this thing called the Securities and Exchange Commission. They can be nasty. So how do I approach people without coming across like a beggar with my hat in my hand, so to speak? How do I talk to people without seeming salesy? If I don't, I just heard you talk about dialing for dollars, Dave. I don't want to do that stuff. I'm shy. I'm not very good at networking. I don't know how to have an investor presentation, investor meeting. So it's all of this fear of the unknown, because like anything, it's a brand new skill until you've done it once. So that's what holds most of us back from any new thing that we try, is that fear of failure, that fear of the unknown, fear of looking foolish, right? So
right.
What if I talk to my friends and my family about my deals and I get rejected? That's going to hurt my little feelings, right? What if they laugh at me? What if, whatever. We got so much stuff going on in our noggins that prevent us from taking action. It's astounding.
Yeah. And I remember back 2011 when I was doing my first few flips, asking family and friends for $100,000, like that seemed like this massive amount that they were willing to invest with me. They trusted me, and I would lay awake at night just thinking about like what all the things that could possibly go wrong, because I hadn't done it before, and so I think, like you said, it's just getting past that first time and knowing it's going into an asset. It's a very, secure asset compared to, a lot of other investments that are out there, and approaching it one step at a time.
I find that so interesting, Kirby, because you're a military guy. You were trained to get shot at, for crying out loud. Maybe that even happened to you. I don't know. But still, we got these irrational fears about things that can really, really hold us back. So imagine a normal person that hasn't been in very many life and death situations. I mean, it really can clog things up.
Yeah. And for me personally, I would have rather lost all my money or put myself in harm's way before putting my family and friends in harm's way. And I think,
right? You're respect for other people and their money.
Yep. Yeah. So how do you approach these roadblocks? I know you have a 5-step formula that you came up with. Can you
Yeah,
kind of give us an overview of how that works?
sure. I'd love to. So one of the big mistakes a lot of people make when they first start raising capital, Kirby, is they think everybody and anybody with a pulse and a checkbook could be a good investor. Wrong, 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 wrong. Because they go out and they splatter stuff all over social media and they talk with everybody and anybody and they make a lot of the dumb mistakes I did. You don't want to do that. I mean, think about it. If you're going out to strangers, trying to raise money from strangers, two big problems. Number one, it's illogical. In order for somebody to invest 100 grand with you, they need to know you, like you, and trust you, just like you mentioned, right? If you're going out to strangers, they don't know you, they don't like you, they sure as hell do not trust you with their money. Why on earth would they invest 100 grand with you? It's illogical. So that's challenge number one. Challenge number two is legalities. And again, I'm a marketing guy, I'm a real estate guy, I'm not a security specialist or a lawyer or an accountant. I'm just explaining my understanding. Mm-hmm. So in the States, you guys have got the Securities and Exchange Commission, plus each state has its own regulatory body as well. Up here in Canada, each province has the same thing. So it's basically the same thing. And really, it's illegal for us as mom and pop real estate investors to raise money from strangers, from the general public, unless you got a license to do so, or unless you've got certain exemptions and a corporate structure set up, or offering memorandums and all this really complicated, expensive legal stuff that's beyond most house flippers or most people are buying single family homes as rentals or doing a BRRRR or whatever, small deals, right? You don't need to be set up with that cumbersome stuff right off the get-go. So mm-hmm. There are a couple of exemptions. One exception is you can work with accredited investors, well-to-do, well-heeled, top 2 or 3% of the population, high income, high net worth individuals. Most of us don't know that many of those kind of folks. So, and everybody's trying to get their attention. Or we can work with close friends, family, and business associates. So that's kind of an exception, an exemption there. So again, before you go out and do anything crazy, get appropriate legal advice about that. Make sure you're set up properly. But this is the target group that we want to focus on. And it just makes the most sense, right? If we focus on friends, family members, people that are in our sphere of influence, they already know us. Hopefully they already like us. Now we just have to work on getting them to trust us with their money. So we got 2 out of 3. And I think Meatloaf sang a song back in the day called 2 out of 3 Ain't Bad. That's a good place to start. So that's a long-winded way to say, Kirby, we want to start with a target group, like I did at the beginning, of about 200 people, friends, family members, business associates. I mean, you were in the military, a gazillion people from your day back there. Focus on people that you already have that pre-existing relationship with. And don't make the mistake I did, which is I just charged in with my deal right off the get-go. That's not going to work nicely. What you want to do instead is create that database, a couple of hundred people, names, email addresses ideally, and then break the ice with them first before you start talking business. Now, how do you break the ice? Well, we walk through what's called a 3-step warm-up campaign. A couple of messages that are just nice and warm and fuzzy. Hey, it's Dave. Chances are it's been a while since we connected. Here's what I've been up to. Here's what the wife's up to. Here's what the kids are up to. Da-da-da-da-da. Here's what's going on with work. Here's how COVID has impacted us. Here's the fun stuff we did before COVID and, whatever. Just kind of a general catch up, what I've been up to for the last 3, 4, 5 years, right? And then here's the trick. At the end of it, you say, hey, well, that's what I've been up to. How about you? How are you doing? Please hit reply to this email. Let's reconnect. I'd love to catch up with you. You can send that out through an email autoresponder system, something like MailChimp or GetResponse or something like that. And then your job, Kirby, is when people reply back to you to legitimately have a little bit of back and forth with them. And don't freak out. I mean, if you send this out to 200 people, you're not going to get 200 replies. You might get 10, 15, 20, 30 replies. You don't have to write everybody an essay. I mean, you just kind of have a little bit of back and forth with them and really reconnect. And then the third part of that message sequence is what I call the transition message. And here's where the magic starts to happen, Kirby. It goes something like this. If I was doing a transition message, it would be, hey, it's Dave. It's been really good reconnecting with you over the last week or so. Want to let you know that moving ahead, I plan on doing a much better job of staying in touch and letting you know what I'm up to with real estate investing. Real estate's something I'm doing really well with. I'm very passionate about it. In fact, I think real estate is the best way for everyday folks like you and like myself to get an above average return on our money backed by a solid tangible asset, a real piece of property. Hey, and who knows, maybe sometime in the future, you might even want to partner with me and share in the profits on a deal. But you know what? If you're really not interested in real estate investing, you can always click the unsubscribe button at the bottom of any of my emails. You'll be taken off of my list immediately. My feelings will be hurt for a little while, but eventually I'll get over it. Okay. Now, in the meantime, if you haven't had a chance to get back to me, please hit reply to this email and let's connect. Send that sucker off to all 200 people. And now we've set the stage for everything that comes after, the other steps that come after that. Does that make sense, Kirby?
Yeah. And I think for people who, a lot of people who listen to this probably don't like selling what they're doing or sharing what they're doing with the intent, to partner at the end, I think doesn't feel natural. But I think the way you're approaching it, you're truly wanting to reconnect with these people. You're giving them the option, saying, hey, if it's not a fit for you don't want to hear from me, you can opt out. And then also knowing that you're going to be, ultimately you will offer them a great opportunity at the end. You're not trying to sell them on something that is going to harm them in any way. So I think those are good things for people to keep in mind who might be listening to this saying, oh, I don't want to be a salesman, or I don't want to try to sell someone.
Most people don't feel comfortable in that role. And I don't either, even though I've got a background in marketing and all that kind of stuff. We don't want to come across as salesy. Now, I got a question for you, Kirby. Let's say we've got 200 people on that list, and we send out that third message and we tell people, hey, if you're not interested, click unsubscribe. How many of those do you think on average will actually unsubscribe? What's your guess?
I probably, I don't know, 5%, 10%.
Yeah. when we talk about this in my workshops, we get people saying, oh, 80% of people are going to opt out and all this kind of stuff. What we found after doing this with hundreds of clients, because we do this stuff for them, is that on average, if you got 200 people on your list, you might get 4 or 5 people opting out of the sequence. So we're talking about less than 3% of the people opt out. Now, why is it so low? I think part of it has to do with doing it this way instead of just charging in. And number 2 is the group of people that we're focusing on. These are people that you already have a pre-existing relationship with, right? These aren't strangers. If these were all strangers, everybody would be opting out. But they aren't, right? They've got a pre-existing relationship, and you've started things off on the right foot by doing it this way.
Yeah, that totally makes sense.
Right.
Nice.
So that's step number 1. Step number 2 is, even though that warm-up sequence is not really designed to get you investor meetings, it might actually happen. So now we got to be ready to go. If somebody puts up their hand and says, hey, Kirby, I'm interested in this real estate thing you're up to. So you aren't like the deer with your, in the headlights going, oh, crap, what's coming on? So what we recommend is that you have a really well put together slideshow presentation. That could be a PowerPoint or a keynote or something like that. And keep it simple, right? Because you got to remember that we are all real estate enthusiasts. We are all what I affectionately call real estate weirdos. We like this stuff. We listen to podcasts. We study up on this. We're involved in it. Most people don't give a darn, right? They do not have the faintest care about active real estate investing. So we got to keep our presentation at that level. I call this Reader's Digest level, right? Reader's Digest is an old magazine, was written for grown-ups. However, it was written at a 13-year-old reading level. So any 13-year-old, average 13-year-old, could read that whole magazine, understand everything. Same idea with our presentation. We need to simplify it, keep it super easy to understand, and understand that the other person isn't going to understand all of our jargon, ARV, LTVs, ROI. Never assume the other person understands anything about real estate investing. And if your 13-year-old kid can understand your presentation easily, then you're on the right track. Does that make sense, Kirby?
Yes, absolutely.
Yeah. So a good PowerPoint keeps you on track. Make sure you don't forget any of the important points. It's more visually interesting for the other person, and it makes sure that you don't forget any important stuff. So really, really important there. Third step, again, you guys, I'm giving you the 30,000 foot overview here. It's simple steps, but there's a lot involved with each one. The third step is all about the marketing, right? Because if we're doing this real estate investing business, you need to be marketing. If you want to take it seriously, you need to be marketing, right? So I call this constant, consistent, edutaining communication. Edutaining means a little bit educational and hopefully a little bit entertaining, always keeping in mind our target group are not real estate enthusiasts like us. They're average people. They want to know that we know our stuff. They sure as heck do not want to know everything we know, right? They just want to get the gist of it. So we want to keep it pretty light. All sorts of different things that you can do for the marketing, Kirby. Good website is the number one place you want to start. You want to have your own little online piece of real estate, what I call your online marketing hub. Everything comes from it. Everything brings people back to it. And our big goal is to get them to click on the contact us button so they book a meeting with us. That's the goal of all the marketing. And I recommend that you communicate with the people on your list at least once a week, right? And ideally with different things every week. So when we do this for our clients, the first week of the month, we send out an electronic newsletter, an e-zine, right? Edutaining, a little bit educational, a little bit entertaining, ideally some pictures of the cool stuff you've been up to the last month. You do a lot of rehab, so it's awesome to have the before and after pictures in there, like the holy crap kind of thing. Shows that you're actively doing what you're up to. Have that kind of stuff going out, and make sure you got a call to action at the end of everything. Hey, if you'd like to find out how this can work for you, click on the button, book a call, let's have a conversation. Everything, people say, Dave, how do you get people booking meetings on your calendar? It's easy. I tell them exactly what to do in the marketing, right? And some of them eventually will do it. So it's that constant drip, drip, drip. So week 1, e-zine. Week 2, maybe it's a blog post, again, with a call to action. Week 3, change it up. Maybe you do a short little video log, a video walkthrough of one of your properties. You guys are doing flips, or you're doing burrs, or you're doing rehabs. That's always fun. Hey, here's what we're up to with this property. Here's the progress we've made. That's really, really good stuff. Then another blog post. And then again, the next month, again, that weekly communication coming from you each time with a specific call to action. Does that make sense, Kirby?
Yeah. It kind of reminds me, there's a book by Darren Hardy called The Compound Effect. And one of the things he says is, if it's simple to do, it's also simple not to do. And so I think something like this makes such a big impact, but few people actually do it because it's simple not to do as well. It's like, it's these, it's just one of those things that you're like, yeah, I'll get around to that. But
or
you
people
never
start
do,
and then they stop, right? Like going to the gym in January, right? Everybody gets off to a good start and then fizzles out by mid-February. The place is empty again, right? Same idea here. So here's a trick. Batch it up, right? So when we're working with our clients, we'll do a lot of their marketing in batches. So you can set it and you can forget it. So for example, video logs, don't do them once a month. Do 5 or 6 all at the same time. Set them up in your system so they automatically come out, and then you don't have to think about it for half a year. Does that make sense? So
absolutely.
Batch. Yeah. So that's step number 3. Step number 4 is to be seen as a real estate authority. Now, I know for a lot of people are saying, well, Dave, I've done 1 deal or 2 deals or whatever. How can I be seen as a real estate authority? Especially when there's a guy like Kirby that's got a podcast and he's done tons and tons of deals and, all this kind of stuff. How can I compete against that? Or how can I compete against Robert Kiyosaki and 8 gazillion Rich Dad, Poor Dad books sold or whatever? Here's the good news. You don't have to compete, because here's the only thing that really matters is that your target group of prospective investors sees you as the go-to guy or the go-to gal when it comes to real estate investing. That's all that matters. Everything else out there is noise. So there's some easy ways to be seen as an authority. And here's the good news. I don't know if you know this stat or you've heard this stat before, Kirby, but 95% of the general population has never invested in a revenue property. 95%. Now, their own house does not count, right? I'm talking about doing a deal, doing a flip, buying a rental property. 95%, that's a stat I've seen, have never done that before. So 95% of the non-real estate people that you know haven't done a deal. So if you've even got one deal under your belt, you are head and shoulders above the majority of folks. Does that make sense?
Yeah.
So you don't need to have dozens or hundreds of deals. And this is another thing that holds people back. They say, I'm not worthy. I haven't done enough deals. If you've got one successful deal under your belt, yes, you have. All right. So it's all about being seen as that authority. How do you do this? Lots of different ways. The way you dress when you're going to be meeting with somebody about investing with you, I suggest dress up a little bit. It shows them respect, gets you respect back. You know this from your military days, my friend. The respect you get from people typically when you're wearing the uniform is light years above when you're in your civvies. Would you agree?
I think so. Yep.
Especially if you're in your dress uniform, then
it's business.
Then it's business. So same idea here, right? Guys, put on the blazer. Even if you're meeting with your Aunt Hilda, who used to change your diapers, doesn't matter, right? You're talking about Aunt Hilda's money. She might give you a little bit of a ribbing about dressing up and all that kind of stuff. Doesn't matter. Dress up. It shows them respect. Gets you some respect as well. Sharp-looking materials. Don't cheap out on your business cards. Get some really good business cards. Don't try to print them out on your laser jet printer at home. Go get some good business cards. Speak intelligently and in a simple way about your strategy and your market. Have a good-looking website. All these kind of things. Get interviewed on people's podcasts. Don't need a ton of them, but once you get interviewed on a podcast, get permission to put that up on your website. That just let everybody know in your target group, hey, I just got interviewed on Kirby's podcast. That's a fantastic way to be seen as an authority in the eyes of your target market. You follow me there, Kirby?
Yeah, great advice.
And last but not least, step number 5 is what we call the snowball effect. And once you've got one or two investors on board, if you're proactive about it, it's really easy to start getting more. And here's what we want to do. We want to get video testimonials from our current investors about how happy they are working with us, right? That is gold. So if you can get video testimonials and get their permission to use it, put that up on your website, let your investor base know about it, feature that as part of your marketing. And then also proactively get warm introductions, because your investors tend to know other people with money. Birds of a feather kind of thing, right? So proactively get warm introductions to people that they know, start those conversations, and that's how you can really start compounding or snowballing this whole effect. So that's step number 5 of the 5-step process. So there we got, create your target group, break the ice with them first. Step number 2 is to make sure that you've got a really good investor presentation put together. So when people put up their hands, you know what to show them. Step number 3 is that constant, consistent edutaining marketing, starting with a investor-focused website. Step number 4 is be seen as an authority. You don't have to have a bunch of deals under your belt. Just, act the part of the professional that you are. And step number 5 is once you got 1 or 2 investors on board, start getting those testimonials and warm introductions.
That's awesome. That's super helpful. I think it kind of follows the same path of any successful business, or successful marketing plan for a business. And I can see how this, again, it's steps that a lot of people just don't do. They know they should. They're not super complicated, but they lead to results if you're consistent about it. So I appreciate you sharing that. That's really helpful. One question that comes up a lot in this community that I'm curious to know your take on is, how do you recommend? So if you go through those 5 steps and you've got, a money partner now, somebody says, yes, I want to partner on your next deal. What's the best strategy for partnering? Is it, typically, do you recommend for someone who's new anyway, a 50-50 split, a fixed interest rate? How do you set that up typically?
Yeah, it really depends on the strategy. So fill me in here, buddy. Are we talking about a flip? Or are we talking about a long-term buy and hold of a property, a BRRRR? What give me a...
BRRRR is a huge method for a lot of the investors.
So I think the simplest thing to do with the BRRRR is to bring them on as a joint venture partner. So quite often, when I was telling you about those rent-own deals I was doing, I would bring on the partner. They would actually qualify for the mortgage to purchase the property. They would put up the money, and I would do all of the work, and I would have my interest registered on title with a caveat or whatever you call it in your area. That way, that's how I was secured. So they were actually on title, but I was doing all of the work, and then we would share the profits. That's probably the simplest way to do it, especially when you first get started. You can do a fixed interest rate as well. I've done that as well, but it really depends on what you're doing. So if you, for example, if you currently own a property that you want to pull some equity out of, then you're probably going to want to bring somebody on in a second mortgage position. And in that case, you're probably going to pay them a fixed interest rate. So it really kind of depends on what you want to be doing.
Yeah.
Everybody's a little bit different.
Yeah, JVs have worked really well for me in the past as well. I think that's a great recommendation.
Here's the thing, there. Because the JV, if you do it right, it's going to be a much more generous return for your investor partner, right? And it also lowers your risk, right? Because nobody's making any money until the property's profitable versus you having to come out of pocket from day one on interest payments. So that's my preference as well. One big tip, though, here's a tip. When you're doing your investor presentation, there's a big temptation to show off your best deals that you've ever done, right, as your case study. I recommend you don't do that. And everybody wants to, and that's what I used to do because we're so proud of that. That's our baby.
Yeah.
But here's the challenge. Challenge number one is the returns are probably so far out of the context of the average person that they're not going to be believable. They're going to be too good to be true, right? And their BS meter is going to beep, and they're going to freak out, and they're going to say, Kirby must be joshing me here. There's no way that you can get these kind of returns because I'm only making 1.2% with my money at the bank. How can we be making these kind of high double-digit or triple-digit type of returns? That's never going to happen, right? So they freak out, and you lose them. And the second challenge is if you don't lose them, then now you've set up really, really high expectations, which are going to be very difficult to meet when you're doing a normal deal. So I always recommend use one of your plain vanilla type deals, an average deal, as your case study, and do your best to underpromise and overdeliver. That is definitely the recipe for success.
That is great advice. Yeah. Even if you're giving someone a 12% return, if you mentioned at some point 13% returns, they're going to be disappointed, even though 12% is like a great return, on their money. Yeah. So,
or you go in and offer them a 7% return, and then you give them 12%, and now you're a hero, right?
Yeah.
You're an absolute hero.
Yeah, it's all perception, I guess. So that's great advice. So in these 5 steps, it seems like there's a lot of detail. Like I understand the concept, and I think a lot of people probably understand the concept as you're explaining it. There's probably a lot of detail that goes into it. I know you offer a full day where you go into it deep on the details of how to implement it. So how can people find out more about that?
Yeah, thanks, Kirby. So we do on a regular basis, we do a full day virtual workshop via Zoom. We keep it small, usually 40 to 50 people max. And we take a deep dive for 8 solid hours through the 5-step process. And it works really, really well because if you're a diehard do-it-yourself kind of person, then you're gonna know everything that you need to do to take action. My business is we have a boutique marketing agency. So we offer the big red easy button is And that is, we'll set everything up for you if you'd like that. So that's where my business really is. So if you guys are interested in that, you can join us for one of the one-day workshops, investorattractionworkshop.com. And if you use the discount code Kirby, for this good-looking guy that's putting on this podcast here, Kirby, that will get you a 50% discount off the already low price of the tickets so that you can join us for a full day. And the reason we don't charge much for the tickets is because my main business isn't selling you how-to information or coaching. My main business is getting clients on board who want us to do and implement all of this stuff for them. So this is a great way for you to learn the whole process. If you want to do it yourself, all the power to you. If you want us to help you out, that's what we do. Does that make sense,
Nice.
Kirby?
Absolutely. Yeah. And the discount code's Kirby, which is my first name. And if you're a barista at Starbucks, that's Kirby, because they've spelled it about 18 different ways between CURB or K.
Well, don't give them the other ways.
Yeah. Yeah, exactly. So it's KIRBY is how you spell that one. But no, that's really helpful. And I think there's probably a lot of people who'd be super interested in getting the details. So that's awesome that you offer that because some people, they want to do it themselves and walk through it, or at least do it themselves first so they know what questions to ask. So that's great. So that's probably the best place for people to start is if somebody has a question, if they want to reach out to you, what's the best way to get in touch with you?
Oh, well, again, the best way to get in touch is to get into our ecosystem. So if you want an easy way to do that, you can get a copy of the book, investorattractionbook.com. That'll get you on the email list. That'll get you my email so you can reply to any of our emails and get in touch with me that way.
All right. Awesome. Yeah. All right. Well, thank you very much for your time today and for all the information. I think that this community is really going to benefit from it.
Well, thank you for all that you do, Kirby. And I look forward to having you on my show as well.
Thanks. Talk to you soon.
Take care.